a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about managed futures ETFs, which have done very, very well this year and have seen a lot of interest from investors. So 2022 has been a very challenging year for investors because almost all major asset classes are down significantly and there have been very few places to hide. Managed futures is a very small area that has managed to shine. So let's talk a little bit about what exactly these ETFs are and what they intend to do. And then we will discuss two ETFs, two managed futures ETFs. And so basically, managed futures are a subset of hedge fund strategies. Within the ETF world, these are a subset of managed futures ETFs are a subset of liquid alts. So liquid alts are basically hedge fund-like strategies which are available in liquid wrappers, mutual funds or ETFs. So these managed futures, they take long and short futures positions in basically futures contracts tied to stocks, bonds, commodities, and currencies, and they aim to make money regardless of market directions. So as long as there are clear trends to follow, these managed futures do well. So basically, this year, the biggest trend was inflation, and these managed futures took a lot of short positions across various asset classes, but long positions in oil. And that is why they were able to outperform. Over the long term, these kind of strategies, they have low correlations to major asset classes like stocks and bonds. So they do add diversification benefits to a portfolio, but investors should remember that these are very, very volatile strategies and trends can reverse very quickly. So a small allocation in a portfolio makes sense. Now there are two managed futures ETFs. Let's take a look at them by going to the code page on Zacks.com. So the first one we are highlighting is DBMF. It is DBI Managed Futures Strategy ETF. This ETF has gathered more than 960 million in assets this year and now has over $1.1 billion in assets. So it is in fact one of the fastest growing ETFs of 2022, and that is because of the impressive performance. So this basically aims to mimic the performance of a group of trend following hedge funds, those quant-driven hedge funds, and it takes long and short futures positions across stocks, bonds, currencies, and commodities. This is actively managed, which makes a lot of sense in these kind of strategies because these trends can change very, very quickly. Now let's go to the code page on Zacks.com. And using the link, you can go to the external homepage. I, in fact, did a podcast with the manager, Andrew Beer. You can listen to the podcast. You can go here and see what exactly it intends to do. So it, as I mentioned, it seeks to replicate the performance of leading managed futures hedge funds. Now, those hedge fund strategies are available to very few investors at a very high cost. So this aims to outperform by providing those strategies in a very low cost ETF wrapper. Now, if you want to learn more, and you can read all the research, and you can also look at the holdings, what it currently holds. So you will see a lot of short positions across euro, across yen, across bonds, and very few long positions. So because of this ETFs taking so many short positions, and the manager says that basically these hedge funds, the trend following hedge funds, were in crash protection mode this year. So that is why this has been able to do so well. The second one that I'm highlighting is relatively small. It is called KFA Mount Lucas Index Strategy ETF, ticker symbol KMLM. This tracks an index. The index is comprised of long and short managed futures, and this has a rules-based methodology. So basically 11 commodities, 6 currencies, 5 global bond markets. Futures contracts on those slightly more expensive, 92 basis points, but not much difference, but much smaller, 347 million in assets. Again, to learn more, you can go to the quote page on Zacks.com and then to the external home page. So as I mentioned, so it tracks a portfolio of 22 liquid futures contracts, and these futures contracts are on 11 commodities, 6 currencies, and 5 global bond markets. So if you like a rules-based strategy, then it makes sense. But if you think that these kind of strategies require active management, and also if you think that AUM matters, then probably DBMF is a better bet for you. So you can take a look at what exactly it is currently holding. So this is also taking a lot of short positions across various commodities, copper, gold, some long positions in commodities like soybean, corn futures, gasoline, live cattle, etc. And this is also short so many currencies because the surge in dollar has been one of the biggest stories this year. So taking short positions against yen, Aussie dollar, Swiss franc, euro, all that help, and then it takes short futures positions in bonds as well. Now on this slide, I have the comparative year-to-date performance versus the S&P 500 index. And in fact, the KFA fund, the index tracking fund, has delivered slightly better performance. It is up about 43%. DBMF, the actively managed fund, the larger one, is up about 33%. And the S&P 500 index, we know, is down about 20% year-to-date. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our videos so that you do not miss anything, and I'll see you next week.